Hey everyone, hopefully you're having a good day. My name's Andy, my channel's Finding Value. Today we're going to go over some ETFs. These are the ETFs that I think are very good. We're going to look to see what the ETFs hold in their ETF to see if the companies are the size that we want, the types of companies that they hold are, we'll call it, they give us enough juice, for the squeeze. And there's going to be some squeezing coming on in the commodity sector. So I've got some ETFs here. I'll kind of go over them really high level. I like GDX, SILJ for precious metals. I like COPX for copper. I like URNM for uranium. I like XOP for oil and natural gas. I like REMX for rare earth metals. And I'm going to go and show you the chart. I'm going to show you the holdings. And we can go through these one by one. So I'm gonna first start with, I'm gonna go all the way to the top. I'm on SILJ. And SILJ has this massive pattern that's been developing. And in pullbacks of these big patterns, you get this kind of 1, 2, 3 pullback. You get a big move here, another one that comes down, and then we get the last one here that we're in. Sometimes this pulls all the way back, sometimes it does not, and it takes off and breaks out of this massive pattern. But on the big long-term picture, you want to see a big pattern. You want to see the pattern that's about to break. It's just in the pattern and it's still developing. It's going to take a little bit of time. So I do think we have a little bit of time here. Not saying that we shouldn't be buying because it is quite low. And the way that I play this is I cost average in. Now, this is SILJ. So I'm going to look and I'm going to go to SILJ's holdings. And these are the holdings that are in the Silver Junior ETF, SILJ. We have First Majestic, Pan America, Mag Silver, Yamana Gold. And by looking at this, Hecla Mining, Endeavor Silver Corp, Gatos Silver, Go Gold Resources, Discovery Silver. I like Discovery Silver quite a bit. El Dorado, Seabridge, Fortuna Silver Mines, which is way down. Hochschild Mining, Alexco Resource. I mean, a lot of these are really good deals. Abra Silver. There's a lot of silver in here too. McEwen Mining, Bear Creek. That thing's been on a tear, I think. They've got Metalla Royalty Streaming, Dolly Varden Silver, Kootenai Silver. Lots of silver in here, which is it's supposed to be. But I think this is they've got a lot of good holdings. This is more of a smaller, if I were to say, it's more of a smaller type holdings, like small cap, mid cap type companies. And that's what I kind of migrate to already. They already have some of my favorite ones like Discovery Silver in here. There's a couple very good value ones too, like Fortuna Silver Mines is down, Alexco Resources down. I think those are going to reverse and do quite well. So overall, I think this one looks pretty solid in terms of the holdings. So I like SILJ. Next, we're going to go back to the charts. We're going to look at GDX. GDX is also in a very large pattern that's broken to the upside, and now we're creating another descending wedge. This is perfect. It's a descending wedge on top of a descending wedge, and this thing will probably break and move a very large, move upward eventually. It may not be this second, may take another year even, maybe even 2 years. But to be within, 6 months to a year, that's kind of my guess will be. This thing's going to break and it's going to make a massive move. So what does GDX hold in its holdings? So they own Newmont Corp, Barrick Gold, like some of the bigger corporations. Franco-Nevada and Wheaton Precious Metals are some of their top holdings and their royalty companies. I like that a lot. Newcrest Mining, Agnico Eagle Mines, Kirkland Lake, Goldfields, Anglo Gold Ashanti, Northern Star Resources, Royal Gold, which is another royalty company, Endeavor Mining, Pan American Silver. So they got some silver mixed in here as well. Yamana Gold, First Majestic's got a beautiful patterns set up. And then they go into some smaller ones, Cisco Gold Royalties. And these are some of the smaller Sandstorm Gold royalties. There's a lot of royalties in here. I like that. I like that they've got royalties. I like that they've got a good mix between silver and gold. I think it's a solid holdings as well. So that would be one I would like, GDX. Scrolling on down, looking at, I'm just going to keep scrolling, URNM. So URNM is in an uptrend. It could come back and tag this upward support trend line. That is a possibility. And that's what it looks like on the weekly candlesticks. And this is the support line I drew in there where it could come. I mean, it could come and turn back up. It could come and pull and hit back in the 60s. But right here, this is a good spot, I think, to cost average in if you guys like it. There's some support looking across here at 70 bucks. So there is support right where it's at. If it breaks support, I think the next support is going to be at 60, low 60s. And hopefully it gets back there because I'm going to buy the living poop out of this in my 401k now that it's open for me to do this. But this is URNM. It's uranium. Now let's look at the holdings. For URNM, here's the holdings of it. So the holdings are Kazatomprom and Camco are by far their largest holdings. Sprott Uranium Trust is third. Yellowcake, Energy Fuels, Denison Mines, Paladin Energy, Next Gen Energy, UEC, CGN Mining, Uranium Royalty Corporation, Global Atomic, Boss Energy, Fission, ISO Energy, Encore Energy, UR Energy, Bannerman, Deep Yellow, Lotus, Goviax, Vimy, Peninsula, UEX, Forcis Metals, may the forces be with you, Azarga, Laramide, Mega Uranium, Consolidated Uranium. I mean, these are all pretty good. They got Appia, Canalaska, and Sky Harbor. So they're all basically, if I were to take a look at this, they're either producing, which they have the producers at their highest weighting, or they're all basically developers or a direct way to play uranium itself. So this is about the only exposure we have directly in the uranium mining companies and is focused the most on uranium. So I think this is a great one. I think the chart looks fine. It could pull back a little bit more in its consolidation period. And if we don't hold here, it could pull back a little bit more even, which I hope, because I'm going to buy the poop out of this thing at some point. So the next one, scrolling on down, we've got TAN. I don't know if I pulled one up for TAN here. Let me see. Yeah, I did. So TAN is, if we have problems in energy, TAN is the solar ETF. And here's the chart behind me. It's a huge pattern. Again, it's a 1, 2, 3, and then we usually go with a break. Sometimes it goes all the way back like it did. We broke out. This is the first leg, I would say, of the move, potentially. Now, some people, they'll say it's controversial. I don't hold as much in this ETF versus some of the other ones. I'm probably, but I'll hold a teeny bit. I'll hold a teeny bit. And if this breaks on down, I'll buy some. This is going to be in the 401k that I'm going to hold this. One could say that this is kind of a first leg, a third wave, and then a fifth wave, and now we're in a big consolidation period where this could pull back even more. And I'll probably wait on it in the short term. Looking at the URNM, TAN holdings. TAN has a lot of obviously solar in it. It's a solar fund. CSIQ, which is Canadian Solar, SunPower, Nova. This is Sunrun. This is Daku. This is that one's a more of a silicon type one. First Solar, Enphase, but it's got decent holdings. Yep. Let's see here. Beam Global. It's kind of a smaller one. Yep. And a lot of Chinese holdings as well, because that's where the majority of this is being made. So that's TAN there. If we come over here, continue to scroll down, we've got COPX. This is a copper ETF. Again, it's a large move up. It's probably in this consolidation period. I'm waiting for this thing to really start to rocket higher. It's a pattern within a pattern. It broke to the upside, did its retest. It's still hanging out here. It's still incredibly cheap at the moment. And I think we'll see a move higher eventually. The gateway between the gateway between where we are in this energy crisis that's coming up and the new, we'll call it whatever's next, is copper. They have to travel through copper. So I think copper is a good one to look at for a long-term investment. And what's in this fund is we've got BHP Group. Oz Minerals is the largest holding. Sumitomo, Freeport-McMoRan, Grupo Mexico, Tech Resources, Glencore, Southern Copper, Antofagasta, First Quantum, Ivanhoe Mines. They're all the big, and there's some smaller copper stuff in here too, Taseko and Turquoise Hill. But they're all the all the copper companies that I like. Some are big diversified ones, some are smaller. It's a really good mix. I think this is a really solid portfolio for copper if you like copper. So COPX is the one that I would choose for an ETF to gain exposure to copper. Another one is REMX that I hold. It's got smoked yesterday. But on the big picture view, what I think's happening is we have a downward motion. We have a big consolidation motion. I call this the double booty. And then we broke up. This is probably going to do a retest, come back maybe to 80s, 90s, come all the way back, and then you buy it here and you ride this thing higher. Because again, in order for us to get to the other side, of this fossil fuels, if we want to go to that route and they want to spend trillions upon trillions of dollars, they have to cross through copper and they have to cross through rare earth metals for this to work, because this is the magnets that spin and generate all this power. It goes into electric vehicles. It's in all of it. So this is the spot that I think we should be looking at. And the holdings in REMX are cobalt, rare earth. We've got lithium in there, and more rare earth. And a lot of these are lithium cobalt type companies. MP Materials are rare earths. Lithium Americas Corp, Livent's more lithium. So it's a lot of lithium. It's lithium, some of the metals, and rare earth metals. Metals being cobalt, nickel type stuff, more of those type of metals. So that's what is in rare earth strategic metals, REMX. Going back to the charts, scrolling on down, I have XOP. This is a spider oil and gas fund. I'm just going to throw kind of a deal in here. And what we're doing is we're trying to break out of this big old downtrend. And there's your downtrend line. We had obviously a break of this big boy back in we broke to the upside here. We went into a bear market, coming down into a bear market. And basically you've got 1, 2, 3 on this downward motion. And let me see if I can draw something in here. No, it's not going to look pretty. And now we're coming on up, and we're either going to come back a little bit for a little bit of a pullback, or we're going to break on through here very soon. This is what it looks like on the very short term, $90. We got some support coming through here at that area. It does look pretty good. And let me just draw. I mean, basically, we're at that support line coming on up. And we'll see what happens here if this thing's ready to break. I mean, I'd be looking at it now. Now, what's in XOP? This is the oil and gas trust that I kind of like. Let's look at the holdings here. So for XOP, we've got Antero Resources, Valero Energy Corp, some larger companies like Chevron and Phillips 66, ExxonMobil, Pioneer. Now, when we get down here, this is where I really start liking it. And I wish they held more of the mid cap and less of the big cap boys. But the ones that I really like are Diamondback Energy's pretty good. That's kind of in a good spot. Devon Energy's good. SM Energy, Callon Petroleum, Laredo is good. Southwestern Energy, Tellurian, Centennial Resource Development, CDEV. Whiting Petroleum is one that has some movement to it. Comstock Resources, Oasis Petroleum. I like all these, and I own all of these individually as individual companies. NOG is Northern Oil and Gas. That's another really good one I like. And here's Crescent Energy Company. They're buying more of that. So those are the ones that I like in terms of ETFs. I think those are pretty solid picks. And I think the holdings are pretty good, and I think their charts look good. That's probably the highest leverage way to play it through ETFs. And it's a diversified way to do it. I'm going to be loaned into these things into my 401k here at some point. I just need, I need it allow it opens in 2022, the beginning of 2022. So I got to wait till then. Otherwise, I'd probably be cost averaging into some of these and getting my positions. And then I'm just going to hold for the long term. But what this is what most of these are is a play on energy. I'm a big energy bull. So I'm playing the current energy, and then I'm playing where they're potentially going to go in the future, the markets. It has to cross through copper. It has to cross through rare earth metals. It's got to get, they're gonna put a bunch of money in solar. It's just the way it is. They're gonna start putting solar on rooftops. They're gonna start putting it everywhere. So I think playing all of that is a pretty good diversified way to play energy. And if we're going to have an energy crisis, I think energy is really the safest spot to be, and playing some of these energy materials. And then I think precious metals, because that's the play on, we'll call it our currency. And if we have massive inflation, I mean, that's going to protect it. So I see all of them playing some role to it. The way that I constructed my personal portfolio with individual companies, I'm heavily into royalty companies to gain exposure to all of this. So it's like a Wheaton Precious Metals, Franco-Nevada, Sandstorm Gold, EMX Royalty, Teuton Resources, like all of the royalty companies. I have Nova Royalty, which is my nickel copper, so I own a good amount in that one. I've been cost averaging in the low $2 range, and I bought a bunch in the single dollar, like $1.40, $1.50 range. I bought a bunch there. So I own the royalty companies because what it does is it takes the costs out of it. Then I've got a lot in energy, just uranium and oil and natural gas. There's going to be problems there. Natural gas, I think, is about to move on up in America. And then oil is another spot that I think is going to be a substitute to natural gas. They're going to run at that, and then we're going to have problems in a year or two. Big problems. The prices are going to go way up. So I own a lot of Canadian oil companies. I own a lot of American oil companies, and they're mainly small cap and mid cap. And the same is for uranium. Uranium, I own all of the African producers, and I own a lot in the, I own some in the Canadian producers as well, like Next Gen Energy and Vision, and a lot of the exploration companies up in Canada. I do own a couple of rare earth metal companies as well, individually. So that's more exposure. And I'm really playing some of the diversified mining companies because they have a hand in everything in the commodity bull market, and they pay very large dividends. We'll see how they fare through this energy crisis, but that's kind of how I'm playing this thing and what my portfolio is. Now, I don't have certain percentages that I have to hit. I just buy whatever's cheap and I continue to purchase it. So I don't have like 10%, 30%. I don't care about any of that. I just go after what I think are the best opportunities and the best value that I can find, and I pile into it. And whatever the percentage is, it turns out to be. But if you were to look at a big picture view on percentages, I'm probably 20 to 20% precious metals physical. And the reason it's down to 20% is because my other portfolio keeps getting larger, and it fluctuates a lot. My big portfolios that are heavily exposed to the mining companies, I've done very well. And that used to be more of a 30%, but that's probably down to 20% now after looking at it. I've got real estate, and really it's just the house that I own. I would buy more if I could. There's nothing to buy here. So I've got my own real estate. I have a mortgage on it. It's going to get eaten away, in my opinion, through inflation in this inflationary environment that I think is coming up. and that these charts are painting, the picture that they're painting. And then we've got the equity side of it, which is probably 40% of my net worth. And that's divvied up amongst 401k, Roth IRAs and IRAs like that. And then my individual account, which I try to limit how much is in my individual account because that's taxable. But I try to have a good amount in there in case something were to happen. I have something to fall back on. I've built it up pretty large, so now I'm building back up the physical precious metals because they're still cheap. So I got to pile into those and try to balance this thing all out a little bit better. So I'm going to pile into more physical, especially platinum, because it's incredibly cheap, and I think that's a huge opportunity there. So that's kind of how I'm doing it. It's also kind of off the grid, tough to tax, all that stuff. So I'm thinking about that as well. Hopefully this helps you out, guys. If you like the content, give me a thumbs up. Subscribe to the channel if you haven't already, and thank you for listening. This is Finding Value.